The following podcast is recorded and produced by Emerge, a media creators co-op.
Good afternoon, ladies and gentlemen. Welcome to the Defion Productions podcast, episode 107. I'm your host, the hardest working nobody in Bitcoin, Don. We're going to talk about all things Bitcoin. A lot of things happen from week to week in this ecosystem, and this past week has been no different. We're going to talk about the price going to an all-time high, a new all-time high, a couple of days ago, and obviously we're dipping a little bit today, as Bitcoin usually does. We're going to talk about gold, because gold has been moving pretty rapidly, as well as silver, and what that means for the broader macro for all assets outside of crypto, including crypto, and my thoughts, and maybe Rich's thoughts as well, on what this means for where our economy is heading and what we think this is signaling. Let's jump into the markets first to kind of take a look at what's happening in real time at 3:02 Eastern Standard Time on Thursday, October 9th. Like I said, a couple of days ago, Bitcoin hit 126,000, brand new all-time high. Sitting here today, right now, at the present moment, we are down to 120,839, down about 2% in the last 24 hours. What's really wild is in the middle of hitting that all-time high, if you look back 7 days, we're actually up almost 0.25% in the last 7 days, even though we're down from the all-time high quite significantly, about 6K from that all-time high sitting right now. So there's been quite a bit of volatility in the last 7 days. The total market cap is at 2.4 trillion. It did hit over 2.5 trillion, which I thought was pretty cool to see on the market cap side for Bitcoin when it was in the 125 range. So we did have that $2.5 trillion market cap with the all-time high sitting at 2.4 trillion right now. Ethereum also was moving, didn't hit an all-time high, but it was around, I think, 46, maybe 4,700-ish, while Bitcoin was up at the 126. Down more, over double Bitcoin in the last 24 hours, almost 5%, 4.5% here. Down in the last 7 days, almost 4%, sitting at 521 trillion. The total crypto market cap was over 4.2 trillion a couple of days ago, sitting at 4.1 trillion, which is pretty good. The last couple of weeks of the podcast, we've been under that 4 trillion. I do remember a couple of weeks ago we were even like hovering around that 3.9 trillion. So we're nicely above that 4 trillion at 4.1, vacillating between 4.1 and 4.2. Fear and greed is about neutral, a little bit closer to the green at 58. The altcoin season chart has it at 42 over 100. A lot of chart people, I'm not one of them, but the ones that pop up every once in a while in my algorithm, were saying that October 6th was a big day, which was a couple days ago. That was the day that all the charters and analysis and the 4-year cycle people were saying that the Bitcoin top should have topped out at. And we did hit 126 right around the 6th. It was either late in the 5th or it was on the 6th. It was right around that day that we did hit the new all-time high. So according to the 4-year cycle theory, that should have been the top, and we're going down now to a bear market. I don't subscribe to that. I am probably 85% to 15% that the 4-year cycle's broken at this point. That we're going to be seeing this choppy Bitcoin price for a while, being that, we have all these institutions in here now, and that, it's just such a different market than it was the last couple of cycles. Altcoins are not doing the altcoin things that they typically do during the bull markets. A lot of the money is staying in Bitcoin. Just kind of how I see it at this point. I don't trade, so it's not really that big of a deal to me personally, whether the cycles are broken or not. A day like today, Bitcoin dropping a couple of thousand. I picked up some more sats this morning. I know it was a sale. My favorite asset was on sale. You buy things you like when they're on sale. So it's not that big of a deal to me. And, dropping from when I woke up this morning, it was like 123.5. So dropping a couple of thousand, to a $2,000 or $3,000 drop doesn't even equate to 2 or 3% at this point. I mean, it's we're only down in the last day 2.1%. So in the grand scheme of things, it's not much. So let's jump into the first article that I'll bring up here to kind of guide the conversation today about what I want to talk about, because it's hard to ignore what's happening in the gold market and in the silver market and what that means for this ecosystem, Bitcoin, and what that means for the overall market, and what typically when gold and silver run, usually that is a precursor for. And there's a lot of weird things happening, and I kind of want to talk it out with you today, Rich, to kind of get your thoughts on that as well. I'm gonna start it off with this stock market news tweet to kind of set the stage for this conversation, and we'll take it from there. In 1971, the U.S. literally ran out of money. Back then, the dollar was backed by gold, which meant every paper dollar represented real gold sitting in U.S. reserves. The problem was the country was spending way more than it earned, printing dollars that didn't have enough gold to back them. As other countries realized this, they started trading their dollars in for gold. The gold reserves began to drain fast. That Saturday night, President Nixon went on TV and told the world the U.S. was suspending temporarily convertibility of dollars into gold. What that really meant was the U.S. couldn't pay what it owed in real money anymore. At that time, Ray Dalio was a young clerk on the floor of the New York Stock Exchange. He thought markets would collapse the next day. Instead, stocks soared. The U.S. had just made money worth less. And when that happens, asset prices usually rise. He later found out the same thing happened in 1933 when FDR also cut the gold link. Both times, the U.S. printed more paper money to keep spending, and each dollar ended up buying less. That moment in 1971 changed the entire global system. From then on, money wasn't something you could exchange for gold. It became a promise backed only by trust. And that's where the connection to today comes in. Trust in that promise is again fading. Inflation is running above target, the dollar is sliding, and people are moving into things that don't rely on faith in any government, such as gold and Bitcoin. Foreign investors aren't pulling away from America, they are protecting themselves. They are still buying U.S. assets, just not without hedging the risk. They don't want to be caught holding paper that keeps losing value. Dalio's story shows how this cycle keeps repeating. The system runs on confidence until it doesn't. And every time it slips, people turn back to hard assets, not because they want to, but because they have to. I'm going to show this video next that encapsulates kind of what we were just reading here. It's Michael Burry. For those of you, okay, why isn't it pausing? Okay, we're gonna do that because it's for some reason it's not pausing. We're gonna show this video. Michael Burry, he is the Big Short, the guy from The Big Short that made the Big Short bet in the movie and made a ton of money shorting the housing market. This is his thoughts on, what we've been saying on this channel for quite some time, that, the United States dollar is just one big Ponzi scheme. And this is a guy that's much smarter than me, a doctor, Dr. Michael Burry, breaking it down. So let's listen to Mike's take on this.
Can tax our population is eclipsed by the amount of our interest on our debt. Basically makes us a Ponzi scheme of some sort. And I think that's the point. I think it's very hard to pick that spot. There's a long, long history. This is one of those things I think our leaders, our government are kind of in this teenage state right now. There's this long history we can rely on for a more mature view of how things work. And I think there's a long history of governments lasting a whole lot longer than they should. And, a lot that we'd rather not have happen. Certainly all the dictators seem to get it done. So I think, it's difficult to time that very precisely. I think we'll have a warning, though. I think a smart analyst, or I shouldn't say that, because I don't even think I'm so smart. I was definitely 50th percentile here at Vanderbilt, no higher. I think if you just pay attention, you'll get a warning sign. Heck, when I figured out the subprime thing, I had to do it off human behavior and various sources of witchcraft wizardry in 05. By early 06, it was apparent in the actual filings that were being made every month. And you just had to look at that, and it was really easy. And so I think you'll see that. If you're thinking, oh, one day a treasury auction will fail, and then I'll have, I don't see that happening, because I think we have enough domestic consumers of debt, including the Fed, but including our military pensions, whatever, Social Security, et cetera, that it's too easy for the government to hide that. And I don't know that you can wait for that.
So there's Michael Burry from The Big Short talking about the dollar-based Ponzi scheme that we are operating in at this current point in time, where we are printing way more dollars into the economy that's backed by basically nothing. And we're sitting here now watching the weirdest system of finance that I've ever in my adult life. I'm 47 years old, been paying attention to this stuff for at least 15 plus years. More so since the great financial crisis. To see gold running the way it's running, hitting all-time highs, silver running the way it's running, hitting all-time highs. Typically, those things happen when something is either breaking or already broken, much like it did after the Great Depression, much like it did after the Great Financial Crisis, much like it always does every time we're in some sort of recessionary period. However, this time, you have gold running all-time high, silver running all-time high, Bitcoin hit an all-time high a couple of days ago, and the S&P 500 and equities are also at all-time high territory. So you have everything running at all-time highs, which tells me that, at least to somebody that's just an idiot like me, there is a lot of dollars out there in the economy floating out there that's making, there's just so much of it that every asset is going up because the people with the money are buying up all these assets. I mean, I don't know how to read this, Rich, except that something is broken. The gold and silver markets are telling us that, because that's what we always look to. Like when you want to know if something's not right, look at what's happening with gold and silver. Gold is on a parabolic run for the last year. Like it's nonstop. When it hit 3, people thought it was going to stop, and now we're past 4. And people are saying by the end of the year it could hit 5. Silver's in the 50s. It's and here Bitcoin's still sitting over 120K. As we're filming, 120.9, close to back to 121. Let's take a look at the stock market. I haven't even looked to see if the stock market is red or if it's green today. Let's take a look in real time what's going on with the stock market. I agree. It is down slightly today. I mean, 0.64%, but the Dow's at 46,000, the S&P's at 6,700, NASDAQ at 22,000. I mean, how do you read this? I don't know how to read this, Rich.
Well, you want my opinion?
Yeah, I mean, what do you?
I think right now, the United States is looking kind of cooked right now. I think a few years ago,
the S&P is up in the last month 2%, 7% 3 months, 14% year to date.
Here's my thing about S&P and all that stuff. Like, I don't think it means anything anymore. We used to think like if the stock market was up, then things were good, but we kind of realize now that that's just not the case anymore. Like, it just used to be like, oh, but the economy's great. Look at the stock market. I just don't think they're the same thing anymore. I think when it comes right down to it, the United States has enormous debt. Just right off the bat, we have enormous debt. So our dollar just isn't worth a lot because there's so much debt. We just continue to print money. Yesterday, the president said he's going to give everybody $2,000 or whatever it is, which is just printing money.
That's ridiculous. I can't believe that.
I mean, like, just, somebody, my wife says to me, she's like, what would you do with we're getting $2,000, and she doesn't want the $2,000. I mean, we'll take the $2,000, but it's like, it's stupid. It's all I'm going to do with that $2,000 is I'm just going to, if I got a check, I literally would just pay down debt with it. I'm not going to use it. I'm going to just pay down debt. I'm not going to use it to buy something because I don't need to. I'll buy stuff I want to buy for my own reasons. I don't need an extra $2,000. I'll say, you know what? That's free debt. That's free, deduction on my debt, like, whatever. in general, people don't have faith in what the country's doing right now. So a lot of people are like, I really don't understand what's going on in the United States right now, whether it's politically, whether it's socially. There's just too much stuff. So a lot of people are like, you know what? I think I'm going to do other things. I think I'm going to try other places. I'm going to try to invest in other stuff. But we keep acting like everything's fine. Our GPA's down. Our inflation is down from what it was, but doesn't mean.
But
it's
is it?
good.
Do we even know that they're telling us the truth and give us the real numbers? Like, we don't know that.
Yeah, nobody's getting hired. Like there's
No.
there's the job market.
Job market's
shit.
dry.
Yeah, like,
Dry as
and I can tell you that from a bunch of people I know that are looking for jobs. And I think everybody's trying to get through the year from what I can tell with the reading I've been doing some just research on the jobs. A lot of companies like, let's just get to the end of the year with who we have. We'll see where we are in January, February, and then maybe we'll start hiring again. But so a lot of people are at a standstill. The housing market's just kind of at a spot that it's been in for a little while. It's overvalued. So I think there's just too much going on. Everybody's like, eh. And when people are nervous, it's just bad. It's just bad. People aren't willing to take a chance. And again, I think you said the one thing that you read said people aren't investing in the United States. They're investing in things that maybe the United States does, but not specifically in the United States.
Take a look at
and some of the things that said that were going to happen because of some crap that's happened with immigration and stuff like that. Companies have pulled back from promises that they made about things they were going to build.
the BRICS nations for sure, but these other countries are buying gold instead of treasuries right now.
Yeah.
Look at the chart that I got up on the screen here. I posted this on Facebook earlier. So anybody that follows me on Facebook would see this. I posted it this morning. These are the returns since January 1st of 2000. Everybody tells you throw money in the spider, S&P, and you print money and you cruise to retirement and all that nonsense. If you take a look at this chart here, if you would have put every dollar that you put in the S&P instead in gold from 2000 to today, you would have completely obliterated whatever you put into an S&P 500 fund. Absolutely obliterated it. And yeah, obviously gold has gone parabolic recently, and a lot of those gains have happened recent. But I posted the gold chart because it would not be fair to post the Bitcoin chart. Because when you post the Bitcoin chart, you can't even see S&P on the screen because it's only been around 16 years, and its gains are just like in the millions of percent from day one. It wouldn't be fair to show that chart. So we show the gold chart. But as Bitcoin continues to get more mature, you're going to be able to overlay the Bitcoin chart over the equities chart and see something similar, that all the hard money is where the value stays. People want real money. Bitcoin, gold, real hard assets. The S&P 500, which is carried by 7 or 8 stocks. I mean, when you take the other 7 or 8 stocks out of there, you're not even getting a return that beats inflation. So if you're not holding those 7 or 8 stocks, you're getting absolutely annihilated. But even holding those Mag 7, Mag 8 companies, gold is still crushing. And so is, gold and Bitcoin are absolutely obliterating putting money in equities. And you still have these, financial advisors and these TradFi guys telling you, oh, put it in the spider, let's set you up with this. Like, they're trying to pretend that they're smarter than they are. That's number one. The TradFi guys are trying to pretend that they're smarter than they are. Number one, they don't know what the market's going to do. They can't predict it. And anybody that tries to tell you that, they're just completely lying to you. They're going to put it in some fund that's traditionally done 7 to 10% or whatever the case may be. But when you factor in all the fees and you factor in inflation, like the chart right here on the screen shows you, and I'm a Bitcoin maxi showing you this stuff, that putting it in gold was way better off than putting it in the S&P 500. And obviously putting it in Bitcoin obliterates gold the last 15, 16 years of Bitcoin's existence. But just choosing gold over the stock market brought you way better returns than putting it in the S&P 500. So
can I
chime in. Go ahead.
Looking at that chart for a second, if you'll notice that there's like a peak in like 2011 for gold, and then another one in the second one, I'm assuming had something to do with the pandemic, right?
Yep, 2020.
But what was the 2010, 2011? Why did gold push? I mean, I don't want to put you on the spot, but why did gold?
Great financial crisis.
Is that when that was?
2008.
But because in the chart it looks like it's kind of Oh, it starts in 2008.
Well, you have
And then it peaks, but like 2011 while we were in
you
the
got to
middle of
remember
it.
too another
Right,
important
right.
piece of
Thank you.
information. Another important piece of information why this chart is relevant. I believe I might get the year wrong. It was either '03 or '04. Gold ETFs went live. So you were able to put money into gold GLD. Those ETFs was like right. So you take a look at like the gold ETF starting to happen in '03, '04, and then you have the paper gold and the physical gold in 2008 that people are, and again, this is why I say it's not normal that you have gold literally parabolic. Like look at the screen. Gold has gone parabolic, absolutely parabolic. Gold does not just go parabolic when everything is okay. Every time you see on this chart, and just in the last 25 years, you got 2008, you got 2020 where you see those spikes. And now here sitting in 2025, you see a spike bigger than the previous two when we had major things happening. The great financial crisis with real estate collapsing, and then you have 2020 with the global pandemic and shutting down businesses and people not working. And you have a time right now that gold is showing that something's happening that's bigger than those. So what is it? Like, what is going on? What is happening? And in my opinion, you have the BRICS nations and you have these other countries that are saying F you to traditionally buying treasuries and buying up our debt, and they're putting it in gold. They're buying gold and Bitcoin. I think there's sovereign nations also buying Bitcoin that just haven't really, released that information. They're buying Bitcoin and gold. They're buying real hard assets. And Bitcoin came along in 2008, so we don't have a chart going back to 2000 with Bitcoin. But if I were to overlay that Bitcoin chart on this, it would make gold look ridiculous. I mean, the gold bugs are doing their laps right now because gold, to be fair, in the last 12 months, gold has outperformed Bitcoin, full transparency, in the last year. But I mean, if you go back 5, Bitcoin is still massively outperforming gold in the last 5 years.
Like gold's not going away. Like that's the difference.
No, of course not.
Everything else could collapse, but gold's still gold. Silver still has a certain amount of value. There's certain things that just outlast everything. Like gold's been with us since before the dollar, before the pound. Like gold's always been valuable. So gold's not going away. Gold's not going anywhere unless some big comet that's full of gold shows up and crashes into the ocean and everybody becomes a billionaire like they talk about on, oh, you see that asteroid that's passing through? We should mine it. Okay, whatever. Okay, but I mean, but gold's always going to have its place, and it's always going to outperform some of these things because it's physical. And I think for most people, and I never thought about the ETF aspect of gold, so this is again where I learned something today, which I guess I never realized, that the people were, how do you handle gold? Where am I putting it? In a safe deposit box?
The portability
am I paying
aspect
for storage?
is where, yep.
So that was something that I never thought about. But now that I can just buy an ETF of gold, that is, whoever decided to set that up was pretty smart, because that really was a way.
But again, yes,
it
is, and all those points are good, but it goes back to the fundamental reason of why holding hard money is so valuable and you want to protect it, and why gold fails where Bitcoin prevails is that custodying Bitcoin in a way where it can't be confiscated from you is so hard. Because even the Bitcoin ETF, the gold ETF, either one of those can be confiscated from you.
Right.
Your brokerage account can shut down on you and freeze.
Yeah.
The government could come in and take those assets. I mean, yes, these are extreme scenarios, and you'd have to be doing something allegedly, or if they just feel like you're, politically against them. But for any reason, they want to shut that down and take it from you, they can. In the GLD and in IBIT.
Well, you could be sued. I mean,
all those ways. And then with
whether you were guilty of something or not, you could be sued.
And holding physical, like right now, there's an article in a newspaper article where it's showing like a kilo of gold and 1 Bitcoin being the same value roughly, and 1 kilo of gold being, let's say, 125,000 and 1 Bitcoin at 125,000. You can hold the Bitcoin on a hardware wallet and get out of Dodge quickly with that kilo. And if you have multiple kilos of gold, it becomes a portability issue. Like getting out of Dodge quickly and taking your wealth with you is another thing to have to worry about. And it's just where Bitcoin solves that immeasurably well.
Yeah, no, I agree.
Yep. Check this one out. I saw this and I had a good chuckle when I saw this. Central bankers, yes, they have a sense of humor. If you really take a good look at the $50 bill, it resembles the Monopoly $50 bill. If you take a good look at the $20 bill, it resembles the Monopoly $20 bill. And vice versa with the 10, the 5, and the 1. Like, you can't make this shit up. Like, they're laughing in your face. Central bankers are telling you that your money's Monopoly. It's Monopoly money. You are playing with fake Monopoly dollars. That's what you have. The dollar bill, the $5 bill, the $10 bill, the $20 bill, it's all Monopoly money. And gold is telling you that, and Bitcoin is telling you that your dollars are eroding away. I don't want to dox the person because I didn't ask him if it was okay. I probably should have today, but I'm not going to dox a guy. A Facebook friend of mine who's been a real world friend of mine, I've known him for 35 plus years, went to school together. He lived around the corner from me when I was growing up. He messaged me. He's been messaging me. I helped get him set up with, a custody exchange account where he could, easily buy Bitcoin and stuff like that. And, we had a conversation about self-custody, but he's very, very new. He just recently made the normie to pleb switch. So doing the self-custody, having that conversation, it's too early for that. So he's got one of the exchanges and he's in Florida. So he has better options than we have here in New York. So he's got it on a custodial right now. But he sent me screenshots yesterday of $3,000 purchase, I think, and $1,000 purchase. It might have been $3,500 and $1,500. I can't. But the point is, like, this guy went from not knowing anything about Bitcoin or caring to know anything about Bitcoin to full on going down the rabbit hole and realizing, I'm not going to say how much money he has in the bank, but he's like, I have all this money in the bank and I'm watching the buying power of these dollars month after month buy me less and less and less. And I see you online making these videos and talking about Bitcoin. And so I started to do some research and I'm realizing that while Bitcoin's going up, the dollar's going down. And it's like, do I want to have dollars or do I want to have Bitcoin? And he's like, I want Bitcoin. And he said every paycheck from here on out, he's going to buy $500 worth of Bitcoin to try to play catch up. And he's like, man, I feel like I'm so late. And I screenshotted him chat GPT that I did. And I simply said, what percentage of the population currently owns Bitcoin? And chat GPT spit back 1.29%. Somewhere around 1.29% of the global population. Let me be clear. I said global population. What percentage of the global population owns Bitcoin? And ChatGPT spit back 1.29%. So when he said to me, I feel like I'm late, I screenshotted that and I texted it back and I said, bro, you're ahead of 98.7% of the world population right now by making this commitment and buying Bitcoin. And that's, sometimes we get so caught up in these numbers. And again, I'm guilty of it too. I start out the podcast telling you what the price of Bitcoin is. It's back over 121, by the way. We talk numbers and all that stuff, and we have a good time with it. But and again, like I said today, like, the number doesn't matter to me because I'm not selling, I'm not trading. It's just a point of conversation and talking. And to be fair, the new people that come in are going to be overly consumed what the price of Bitcoin is, and that's going to be a starter of conversation, and you're going to have to have that conversation and talk to them about that. So you're going to have to know what the price is and be ready for those types of conversations. But here's a guy that I was able to orange pill vicariously through making a YouTube channel and putting stuff on Facebook and putting stuff on X, which is the whole reason why I'm doing this. I'm not monetized on any of these platforms outside of Facebook. So I'm not making money by making this video or making all this stuff. I'm trying to make that 1.29% global population go up. I want more people to understand that holding these dollars and coveting, the dollar bill is these monopoly dollars. These central bankers laughing at you with the monopoly dollars on the screen right here. You're playing monopoly in the traditional finance system. And if you want to stop playing monopoly and you want to play for real, you got to own Bitcoin. And I'll say it as a Bitcoin maxi, and it may piss off some of my Bitcoin maxi cohorts, but if you're not going to own Bitcoin, at least own gold. I'm not advocating for that. I'm not saying to do that. But if you're not going to do Bitcoin, don't hoard dollars, because dollars are melting. It's a melting ice cube. Own hard assets, real money, real value. And that's the I went on a little bit of a rant. I think somebody my eyes are getting bad at 47. Did somebody comment something, or am I seeing things?
Somebody said hi.
Oh, somebody said hi. Can you read the first name out? So Julie. Okay, hi Julie. Thanks for commenting. Much appreciated. Hopefully you're a Bitcoiner. Hopefully you're on the team. Even if you're not, it's okay.
It's interesting because every once in a while I will tell people, hey, I produce, a Bitcoin podcast with a guy, and I own very, very little.
With a nobody. We got to be very clear. The hardest working nobody in Bitcoin.
Hardest working nobody. and I said to him, I said to the guy, he said something about Bitcoin. He's like, I'm like, it's the same thing that you must have had 1,000 times. But I said to him, he said, well, like it's always up and it's down and it's like this. And I'm like, well, and I kind of tried to explain like your thoughts on Bitcoin where you're not a trader per se. Like you're just acquiring it. And I said, if you think about it from the standpoint of your stocks, I go, you have stocks or whatever. I go, you usually have a whatever. I said, okay, how often do you check it? He goes, what do you mean? I'm like, how often do you look at how's it going? He's like, almost never. I said, so I go, when do you look at when the quarterly statement comes, I look and see how my last quarter was. Like he's literally checking his stocks 4 times a year. I mean, like you're not I said to him, I said, no offense. I go, and I'm not real good at it either. I said, I don't think we're really we don't really have a good sense of what is happening to money. And I tried to explain to him, I'm like, think about how much money you've been putting into your I think he had a 401. I said, you're putting in your 401 every month. I go, and how much has it grown? I go, and then compare that to some of the other things that you could have done with it. I said, I'm learning now that some of these 401, 403 types of things are not really, they were sold to us as this great thing. And I guess there's nothing bad about them, but you're not making as much money as you are because of the fact that the dollar keeps being devalued. And he did not understand that at all. And I said, well, you should watch the podcast because Don can explain it a lot better.
Here's a chart to help you here. Let me put this up. And again, for boomers, this is easier for them to understand than the Bitcoin conversation because Bitcoin is gold 2.0. So if you can get them to wrap their head around the gold conversation, it's not a far leap to get them to the Bitcoin conversation. So let's pretend that we have a fictitious individual who was living in 1971 and was old enough to at least gain some revenue some sort of way and decided to put that revenue that they were getting into gold instead of stocks, instead of real estate, instead of anything else they could do. So in 1971, when we got off the gold standard, our fictitious individual bought 1 ounce of gold for $35. Okay. And you can multiply that by 10. You can multiply that by 100, whatever. We're going to play with the one and just say $35 in 1971. So today, it's $4,000 an ounce. That $35 that he put in way back then is now $4,000 today. So 4,000 divided by 35 is 114.3. So since the end of the gold standard in 1971, because you have to remember, all dollars are is a denominator barometer of what we measure value in. It's not the money. It's the barometer of what we value things in, okay? Since the end of the gold standard in 1971, the dollar has lost 99.1% of its gold-based value, which, until Bitcoin came along, was universally felt to be the soundest of sound money, until Bitcoin came along and, in my opinion, replaced that, gold 2.0. So since the end of the gold standard in 1971, the dollar has lost about 99.1% of its gold-based value. What cost $1 in 1971 gold terms now cost $114. Again, we're using the dollar as the denominating term of value. So 1971, what you could buy for $1 in gold terms today would cost $114 today to buy that same thing. So if you went to the candy store with $1 back then, today it would take $114 to buy the same candy in that candy store for $1. So when you get people to think that way and see that they're being, and I believe that the caption here is you're being looted. Yep, you're being looted. Like, You're being robbed. And again, I'm taxation is theft guy. I believe when the government takes taxes from me, they're robbing me. But that pales in comparison to what they're doing to our actual value. They're robbing you in taxes while simultaneously robbing you in buying power. I'm 47 years old. I was born in 1978. My lifetime began 7 years after this right here. So my entire lifetime has spanned the government robbing buying power from my family, the people that I care about, and every single person around me. The only people who have been able to escape this have been the ones that have understood money and value enough to put their value in things that outpaced this robbery, which has been gold, or recently real estate, or recently even the S&P 500, even though we just showed you that we shattered that, because if you just put it in gold, you're destroying the S&P 500. So hard sound assets are absolutely obliterating what's happening to the common everyday person. So if you take a look at that with gold, Bitcoin, it took gold 5,000 years to do this. Gold's been around for 5,000 years, right? $35 in 1971, which was 1% of that time. 50 years ago, 50 years is 1% of 5,000. So 99% of its existence, it got to $35 an ounce. The last 1% of it, it's gone up to 4,000. Now we have Bitcoin, which has only been around for not even 1% of the time that gold's been around. And we've seen Bitcoin go from $0 to $126,000. The multiplier effect with Bitcoin is just, you can't even comprehend it with your mind. You're just seeing it happen in real time. So if gold is showing you right now, gold is showing you that the money, it's like, hey, dumbass, the money's broken. The money is broken, dumbass. And gold is doing what it's doing. What do you think is going to happen next when the boomers, I hate to be morbid, start to die off, and the Zoomers and the millennials are like, we don't like that shiny rock no more, and we don't like the clunkiness, and we want Bitcoin. We want the easy digital money for the internet, whatever you want to call it. We would rather have it on a hard wallet, or some people on their exchanges, whatever the case may be, whatever fits their fancy. We want that. We want the better updated version of gold. And again, I'm not shitting on gold. Gold has been great and still has value for people and is obviously still doing things. But Bitcoin takes everything that's good with gold and puts it on steroids. It puts, it makes a person like me look like Arnold Schwarzenegger, to put it in perspective. Like it's gold on steroids. That's what Bitcoin is. That's what Bitcoin is doing. That's what Bitcoin's going to do. And this volatility that you see with Bitcoin, the extensive, like that's good. You need that volatility. You need to see this asset go from 20,000 to 3,000, from 3,000 to 69,000, from 69,000 to 15,000, from 15,000 to 126,000, 126 down to 120, and then where do we go next? Where does this thing go next? Because gold is telling you that something is broken, which is why I started this podcast out by saying I'm pretty 80. You can never be 100, but I'm about 85%. That the 4-year cycle is broken, and Bitcoin is in this new place of being a regular, mature macro asset that's going to have its normal 10-15% pullbacks and up and down, and we're going to make our stair step way to this asset being worth $500,000 to $1 million and beyond. And timetable wise, I'm not quite sure. I don't want to say 5, 10, 15, 20. I don't know. But this thing is just going to do things that is going to be hard to comprehend for people that don't understand this chart that I just showed you, with gold being $35 an ounce 55 years ago and today being 4,000. And realizing that your buying power of your dollars is just being ripped away from you every single day. And people watching this podcast that are just regular everyday people that aren't Bitcoiners, which I don't know why this would be in your algorithm if you're not, but if you are out there and you don't own Bitcoin, or you're a Bitcoin hater, or you don't understand it, or you think it's a Ponzi scheme, or whatever the case may be, fine, awesome. Who am I to tell you what to believe? But Rich, if you want to put that right back up there again, these are facts. This is what happened with hard money. The hard money that was here before Bitcoin. $35 an ounce in 1971. It's $4,000 today.
Well,
99% of the dollar's buying power has been eroded away.
So I said I did some rabbit hole stuff the other day, and I was looking at like $1 in 1971 versus $1 today. So the value of the dollar is gone. So it's like what you could buy with $1 in 71 is now like $8. Is that what it was? Like that's what it was. But like the cost of your house has gone up by like 17%, 1,700%. So like your dollar buy is worth like $8 now, but the house that you bought for whatever is now 18 times. So like again, there's a million different examples and things that we can show people, you can show people that basically say, listen, yeah, you're making more money now than you used to from a number amount, but the number means nothing because everything else is not keeping up. So again, you get a 2% raise, but inflation's 3%. You didn't get a raise. You're losing money, and so that's what I try to explain to people now that I think I'm much more financial literate than I've been in. Like, I thought I was always pretty good at it, but now I'm much more aware of some of the common sense things that most people don't have, that you don't think of it that way. You only think about it in terms of the number with no scale. I can look at a chart, and I used to teach math, and I could look at a chart, and I would show people a chart. And it would be going like this. I go, wow, that's really, look at that chart, the way it goes up. I said, that's great. I go, but what's the scale on the chart? And they, what do you mean? I'm like, you saw a chart and it went like this. I said, but what's the scale? Is here to here 0 to 100? Or is there here to here 92 to 93? Like, it's all about the scale on the left side of the chart. I go, so you can zoom in and show me statistics for anything, but people don't think about it. They only think about the number. You know what I mean? Like, oh, I got a 2% raise or I got a 6% raise. I said, well, 6% raise is great if inflation is under 6%. If inflation's 8% like it was last year, or whatever it was, 18 months ago, that 6% is doing you no good because you're losing money on the game. You're losing money. It's like if I go and play roulette. It's a law of diminishing returns when I play roulette, unless I have a nice run of luck. Because realistically, the way the odds work, no matter how I cover the table, the odds are, if I put in like $8 per spin, okay, let's say it's $8 or $7 out of whatever, just as a scale, my odds of getting that 8% back, that $8 back on everything is, I'm always, maybe I'll get back $7. So if I put in $100, eventually that $100 is gone unless I have a really, really good run of luck. Over diminishing returns, I'm going to lose that $100 if I sit there long enough. And that's essentially what's happening with the concept of inflation, because nothing else that we're doing is keeping up with inflation. If everybody's incomes were going up at the standard rate of inflation, if the cost of living expenses were built in the contracts and stuff, that'd be great. But they aren't. They aren't for 98% of us.
That's a good example, too, with the gambling, because like people don't understand that the longer you play and sit in the casino, the more likely you are to give all the money to the casino. That's why they give you comps. That's why they do all those things, because they want to keep you there longer, because the longer you play, the more the house edge plays itself out. You never have better odds. The best odds you have is on that first spin. Because the best way to negate luck is to go there and say, I'm playing one game, one time. That's your best odds. You go up to a slot machine. No, it's being silly.
Right.
It's being silly, but the best way to, and it's stupid. Who would drive all the way to the casino to do that? But like your best odds is say, I'm going to the craps table, I'm playing one roll. I'm going to the roulette table, I'm playing one roll. I'm going to the slot machine, one pull. Because the best odds that you have is like, I'm going to be there for 1 minute, and the shortest amount of time negates the casino. Now you'll probably still lose, but the best odds you'll have is negating the time, because the time.
There's lots of studies about empirical probability. And like, again, I used to teach math like 30 years ago, but when I used to like find these things and I would show kids.
Rich, you're like 25. How is that possible?
Well, I was a young teacher. But I would like explain to them what like the difference of, because everybody's like, well, like the lottery. I'm going to buy 5 tickets for the lottery because that's going to give me a better chance. I'm like, or if I go and again I watch, I'm just as guilty as this because I'm having fun. But I'm sitting at the roulette table and we all look at that list of numbers that just came up, the last 20 numbers that come up. And everybody's like, well, 0-0 hasn't come up in a while. I'm going to bet 0-0.
Completely irrelevant.
And it's irrelevant because every spin is an independent event. But there also is empirical probability that says the law of averages say that 0-0 will come up over a period of time. By the law of average, even though it's completely independent, 0-0 will come up, and I forget what the percentage was, or whatever. So there are rules, like that's why there's counting cards rules and stuff like that in casinos, because there are some systems that you can follow. I don't understand counting cards, but I know with roulette, there are some things that you can kind of like, if you play the odds, you can say, but you're totally right. The best thing with it to do is like, bet do 2-3 things, play red, and then go to dinner.
I want to get this out because I don't want to forget it. You just made me think of this because we're talking about this gambling analogy. Before I get to my analogy that you made me think of, I want to preface it with the hardest thing to get people to conceptualize is to stop thinking about how much money you make and how much money you save. Think about buying power. What is my buying power? That's the thing that you have to focus on. Stop focusing on I make $100,000 a year or I'm putting 10% here. All that shit is not as relevant as what is your buying power. What do I have with my buying power? So to go back to the conversation that we were just having in regards to gambling and how people are unable to see and focus on how to put themselves in the best position to succeed, there's this gambling analogy where you have 3 doors. Right? You're in a game, the game show analogy, and I'm sure you've heard this before. Yeah. You have 3 doors, and the game show host asks you to pick door 1, door 2, door 3. Behind one door is $1 million. Behind the other 2 doors is absolutely nothing. So you have a 33% chance of being a millionaire, and you make your choice. Right before he opens up the door, let's say you pick door number 1, right? You pick door number 1. So door number 2 and door number 3, you pick right before he goes to open door number 1 to show you, he offers you the opportunity to give your door up and pick between door number 2 and door number 3. Most people will tell you some kind of like gambling superstition, or they'll say, I want to stick with the door that I already have, because what if I pick another one and that door, then I'll feel terrible if the door that I picked, number 1, has the $1 million and instead I picked door number 2. And the answer to that question unequivocally always is, if you're given the option, you always pick a new door. And you know why that is, right?
Not necessarily, no.
You don't know why that is.
No.
So when you were originally given the decision to pick one of 3 doors, your odds were what?
Oh, yeah. So
33%.
Totally from an odd standpoint.
33%.
Right.
You're now given a new odd, which is 50-50, because now you're picking between 2 doors instead of 3 doors.
Right.
It's always you pick the new door.
Well, and the theory is with that, too, is that the game's not rigged. And that's the funny thing, because what do we all know? And you say it every single week.
The game's rigged.
The game's rigged.
Mm-hmm.
So the game's rigged. If you're on, let's make a deal. If you're playing the stock market, if you're at the casino, the game's rigged. Very few casinos go out of business, okay? We can name a couple people.
Mr. Trump.
But in general, casinos generally, and if they do go out of business, it's got nothing to do with the gambling percentage part of it. It's all kinds of external factors. It was in a bad location, the hotel was too expensive, there were bugs, there were rats, it was poorly managed, there was embezzlement. It has nothing to do with the gambling part of it.
Didn't pay the construction workers?
Yeah, right, that type of stuff. No, that never happens. But no, you're right. And I think like I try to rationalize my own decision making about what should I do? And you and I have talked off the air about the changes I'm trying to make with my own money that I have now, because I understand the game that I'm playing, the 403B game, is rigged for me to lose money long term. So, and I keep saying, well, if I just leave it there, eventually I'll get it back. But why is that acceptable? Like, why am I willing to accept that that's good enough? I've lost money twice, 3 times, in the very, very beginning, but 2 major times that I've lost, 3 times if you want to count, because I didn't have that much in 2001 when I lost money. I had a lot I lost obviously some COVID money, and then, yes, did I make it back? Sure. But how much did I lose in 08? In a day, essentially. So why do I continue to say, well, those are the rules, that's the way the game works, and a lot of us are just suckers?
All right, I got a couple of articles to show and go through before we end this podcast in about 10 minutes. This one here, Bitcoin addresses over 100 Bitcoin in those addresses have hit a new all-time high. So Bitcoin whales are stacking like never before. We've reached an all-time high of addresses, Bitcoin whales that have over 100 Bitcoin in their wallets. Now it's kind of weird because this is the cycle where we've seen a lot of the big whales holding like tens of thousands of Bitcoin selling some of their Bitcoin off. But the accumulation being done by people lower down the tier is picked up. So people are accumulating and owning over 100. So you're spreading it out. Instead of people owning 60 or 70,000 Bitcoin, they're selling off a couple thousand, and you have new people coming in that own over 100 that are becoming the new whales, which I think is good. It's healthy. It's rotating the Bitcoin around, which I think is a good thing. Earlier this morning, $5.1 trillion asset manager State Street says 60% of institutional investors plan to increase their allocation in Bitcoin and crypto. I think that's a long-term thing. I think that's more than just a 2026 type of thing. It's what I talked about a little while ago. As the boomers age out and the people with the wealth end up being these millennials and zoomers, and they're starting to position themselves differently than people positioned themselves 30 to 40 years ago, you're going to see more of the money flowing into Bitcoin. And unfortunately crypto for the shitcoiners, but going into Bitcoin, and you're going to see a massive shift in how people allocate their assets, which again, it's a wealth redistribution. It's, I think you're going to see a point in time where, you're not going to be seeing all-time highs in equities. Things are going to change. You're going to see money flowing out of equities and into Bitcoin. I think maybe that's a hot take, but I think that's what we're going to end up seeing. Goldman Sachs says the U.S. dollar is now more volatile than the S&P 500, a rare and ominous sign for global markets. Think about that for a second. The dollar, the denominator that we denominate things in, is now being said by Goldman Sachs, one of the biggest players on Wall Street, it's more volatile to hold the U.S. dollar than it is to hold the S&P 500, which we just showed you is being outperformed by gold and Bitcoin. We are in an absolutely upside down economy. The shit is so wild and so weird. And to somebody like me who's orange pilled or outside of this matrix and looking at it from the outside in, I sometimes I'm just like, I don't understand how people can't see this stuff. It's crazy to me. Let's show another video real quick. We got one right here. Where is it? Right here. Cendric Youngelman, good follow on X, is showing and sharing a video by Larry Leopold, who is also a really good follow on X. We do follow each other. Let's hear him in his own words for 2 minutes and 57 seconds. His thoughts.
Powell is bluffing. He says we're going to get inflation back to 2%. He says we haven't lost control, even though he has. And the market believes him because the forward swaps are at 275 for 5-year inflation. It's bullshit, but people believe him. When things start to break, he will have to change his tune well before the inflation rate's 2%. And everyone's going to go, that's interesting. He really has lost control. He cannot get inflation down. All those guys who've been talking about inflation is inevitable, they are right. And then you're going to see just an enormous movement of capital from other things into our things. There's $450 trillion of fiat shit in the world. Cash, stocks, and bonds. All of Bitcoin, what is it today? 350 billion, 400 billion? So we're 450 trillion, 400 billion of Bitcoin. Let's call it 6 or 7 trillion of sound money. Bitcoin, gold stocks. Okay. 450 trill of unsound money. Bonds, cash, and stocks. When a quorum of the people come to the conclusion that they can never stop printing and that it is inevitable that they will have to continue to print, they are going to say, please protect my assets in stuff that cannot be printed. All it takes, it doesn't take the whole 450 coming into Bitcoin or gold for us to go way up in price. Even if only 10% of it comes in, that's $45 trillion chasing 7. How much does the value of our stuff have to go up? It's true that in 1980, when gold was very hot and very, everyone thought inflation would go on forever, right at the peak of that market before Volcker tamed it. Okay, in 1980, gold represented 20% of all financial assets, at that time. I mean, gold and Bitcoin today represent less than 1% of all financial assets. So there's plenty of upside here in the sound money stuff, if one assumes that they can never stop printing. And I believe that, with every bone in my body, I believe that. I think other people are coming to believe that, but for our stuff to work, we need more people to believe that. And, human beings do tend to, want to protect themselves. And so, as the word spreads and as the inflation continues to get bad or worse, more and more people are becoming aware, right? I mean, more and more people are being orange pilled, more and more people are aware of inflation, more and more people are interested in gold. I mean, everyone kind of gets it. I mean, this thing is broken. I mean, California, let's send out checks to help with inflation. Oh, that's a good idea. Spain just announced they're doing that. I mean, these guys can't stop. We're in the right place, but sadly, it's not going as fast as I would like, because we all have limited time on this planet. It's like, let's rip this Band-Aid off. Let's get this over with. Let's just solve it. Powell is one.
I echo Larry's sentiments that he said at the end. He wishes it would happen a little bit faster. I do as well. Larry's a little bit older than me, so for him, it's probably, he'd like to see it for a little bit different reasons than me. Maybe the same too, but selfishly, he'd like to be around to see the big change. I don't know what's happening. I just know that I'm very, very happy and very, very comfortable owning Bitcoin. And, a lot is a very subjective term, depending on how much somebody has. I don't feel like it's enough. So I have a good amount of Bitcoin. I'm always adding. I want more. Never enough is always the answer to how much you got. But seeing what's happening in gold and silver, and with Bitcoin being where it's at in this weird place of what's going on right now with the cycles, is it broken, is it not, where's Bitcoin going to go from here, where's gold going to go from here, what the hell's going on with equities, is Trump going to give people more free money like we did in 2020, is inflation going to go up, the new Fed that's going to come in a couple of months, that's going to be wanting to lower interest rates 250 basis points, there's just a lot of crazy shit that's potentially going to be happening. And I would hate to not own any Bitcoin right now. And I don't know. This is just, did we get another, we got another comment?
Just a repost.
Okay, cool. Thank you. Appreciate the repost. Yeah, man, we can show this last one here. This is just basically what I kind of started the whole podcast kind of talking about. The Martini guy tweeted this: today is officially the end of the bull market. Previous market tops in 2013, 367 days after the halving. 2017, 526 days after the halving. 2021, 549 days after the halving. 2025, 537 days since the 2024 halving. If you believe in 4-year cycles, this is the end of the bull market. I don't believe that. And Carl Moon down here, I don't agree. I think the top will be in December, around 200 to 500K. I don't know if we're going to get to 200. If the 4-year cycle is broken, we're not going parabolic. I'll say that. If the 4-year cycle is broken, we're not going parabolic. Because if we go parabolic, then the cool off is going to be a regression 1-year bear market like we typically get, which is just continuing the 4-year cycle. I think we're going to be stair-stepping. I think we're just going to keep stair-stepping up, and I think this is a mature asset. I think institutions are owning. I don't think retail's coming in here like they did before. Maybe there's a pump in alts. Maybe that gets a continuation of the cycles. Maybe, I don't know. I don't really concern myself too much with that, with all the shit that goes on in that market. But I think Bitcoin is. I think the days of 70+% drops in Bitcoin are done. I'll say that on camera. I think that's over. Can we still get a 40 or 50% drop at some point in time? Sure, potentially. But I think those deep bear markets that last a year, I think that shit's done. Institutions are here now. Mature money's here now. Smart money is here now. People that don't bet with emotion but hold things for long periods of time own this asset now. It's not the retail guy that is on Wall Street bets and meme stocking and doing all that nonsense. Like, those guys aren't here. They're still owning their shit meme coins. They're not true Bitcoin holders. The maxis have taken over, I think, for better or for worse. And I think some of these institutions are going to become Bitcoin maxis, and some of these IBIT holders that own IBIT for a little while and they start researching are going to probably sell their IBIT and hold the spot and put in cold storage. And we're going to have more people that are going to take them off exchanges, and that stuff's just going to continue to happen. Wild times that we're in. And again, I would hate to not own Bitcoin with all the craziness that's going on in markets. For the 107th time, don't trust, verify. Thanks for watching. Next week, we got an interview with Florida Hodl from the Bitcoin Army that I'm definitely looking forward to presenting to you guys and having a cool conversation with a fellow Bitcoin Army guy. If you're not following the Bitcoin Army on Bitcoin Spaces, they do a space every single day. Great follows across that army. And I look forward to next week having a conversation with Florida Hodl and talking all things Bitcoin. Thanks, guys. Peace.